We all know Tesla from the cars on the street. But what is Tesla actually? Is it just a car company or is it something way bigger? To understand the valuation of Tesla, we need to look beyond cars, in my opinion. Because then is what we see three pillars. We have number one is AI and autonomy. There's a full self-driving technology like the robot taxis and the humanoid robots. Musk is talking a lot about it, and they can create an entirely new revenue streams. Then we have number two. That is the energy battery storage and grid solutions, which Tesla gives a position in the global transition to renewable energy. And then last but not least, that is the manufacturing scale. That is Tesla's ability to produce a complex technology, but then in a massive scale. And that is really a competitive advantage for Tesla. So together these pillars suggest that Tesla is building an ecosystem and not just selling vehicles. So how do we look then at the stock price of Tesla? So imagine you have two investors. The first one opens spreadsheets, he's looking to the books and to the earnings, the ratios as well, and he concludes this Tesla stock is massively overpriced. Then we have the second trader. He don't open any spreadsheet. No, he just looks to the technology and to the trends and the artificial intelligence and also the future of the transportation. And this investor believes that the company could reshape the entire industry. So the funny thing is, both look to the same stock, but they're living in two completely different timelines. Because the truth is, the price of Tesla is not just about today, but it is about what investors believe is what the world will look like tomorrow. And to really understand that, we need to zoom out from just one company to the entire market. So in this video, I will break down Tesla's fundamentals, its valuation, so you can decide by yourself whether it's a hype or it's a growth or maybe something in between. So let's go now to the numbers. These are the fundamentals of Tesla. Now, a lot of numbers, and some people think it's very boring. Maybe it is, but I think actually it's also very important to understand these kind of numbers if you want to invest. So let's go step by step through it. What do we have here? We have here an overview, a statement, statistics, and dividends. So maybe we start a little bit light and we go to the dividends. Let's see here, and this is not an error. This is just that Tesla say we never pay dividends and they have no current plans to do so. So why doesn't Tesla want to pay dividend? It's because Tesla is a growth company and not an income company. So instead of paying profits to the shareholders, Tesla want to reinvest the cash for example, new factories, AI development, full self-driving cars. Now we spoke earlier about the energy storage or maybe the robotics. So there's a lot of investing for them. And if Tesla can reinvest its capital at a high returns, for example, on 20 to 30%, it's financially much smarter than to pay the dividend to the investors. So keep the money in the company and let it grow. So we have other companies like Johnson & Johnson. Let's see, here the arrow screen is gone and you can see how they pay the dividend. It's here per year, per dividend per share, the payout ratio here. And why a company usually pay dividends? It's typical when they grow a little bit slower, or the company generate more cash than it can reinvest efficiently. So it becomes, let's say, a mature company. And you have the companies like Coca-Cola, Johnson & Johnson, this one, we have here another one, Procter & Gamble. So these companies grow slowly and they return the cash to the shareholders. So that is one part. Now we go to the statistics, and I want to talk with you about the book value per share, the price to book, and the premium. So we see here all the ratios, and we go first to the book value per share. Where can we see this one? Here's the book value per share. It's $22.49. But that is for Procter & Gamble, and we are not interested in that company. We want to go to the Tesla. So let's go there. And here is the book value per share for Tesla, $21.90. So it means actually this is just the share price actually for Tesla. Then we will have the price to book. It's somewhere here above. Let's take a look. Price to book ratio. And that is $90.06. So what does it mean? It means that the market price of the stock is 90 times higher than the book value. So when the stock is trading in line with the book value, it means the PB is 1. And if it's higher, we have to deal with a premium. And we can see that also because the stock price here per share was 21. No, that was here, the book value per share, 21.90. And here we see a price of the Tesla is around 410. So we can calculate the premium. So we can see it already with the price to book, but we can calculate it as well. The premium is the stock price minus the book value per share. So if we do it for Tesla, it will be something like 390 or 395. So these metrics helps us to understand the financial strength and efficiency, but it don't capture actually the future innovation or the new markets. And actually we cannot use these ratios for stocks like Tesla. So these financial ratios, they tell us where the company is today, but not necessarily where it's going. And that's where Tesla becomes interesting. So probably you are thinking now, do we have no metrics at all for the value of Tesla? And yes, of course, we have much better metrics for Tesla. And let's see which they are. That's, for example, the revenue growth, the free cash flow, the return on invested capital. So let's see where we can find them. First, we go to the revenue. We have here a special tab with nice graphs. And what do we see here in 2025? We see a revenue growth. In 2025, it was roughly 95 billion. But the growth rates between the two segments were quite different. So we have the automotive grew by a modest 3 to 5%. It's not very high, but there was a drop of 15% in deliveries for the older models. And we see here the energy generation and storage. It has a revenue grow by 27%. And the forecast is expected to contribute 15 to 18%. So you can see the graph here. It's clearly how it is growing over the last years. And there's a future price also calculated. So this maker pack, and I mean the maker pack is the utility and the scale battery, has become Tesla's secret weapon. They have much higher margins than the consumer vehicles. And we talked about this earlier. So now we go to the statistics. And I want to go with you to the free cash flow. It always sounds great, the free cash flow. That is for Tesla $1.76. And what does it mean? With other words, Tesla will still generating cash while they're spending billions. So that's a very good number. Another interesting ratio is the CapEx per share. We see it here for $2.41. So that is actually an 8.5 billion spending for 2025. Now, if you want to track Elon Musk's promise of doubling his spendings in 2026, keep an eye on this CapEx, because that is the last quarter, it was 68 cents per share, but we will see it need to climb towards 150 if the AI transition is in full swing. If this is not growing, then it's not in full swing. So there's an interesting ratio also to take a look at. Then we have another one, that's the cash per share. Where do we see the cash per share? It was here, $12.56. And that's actually their safety net. Because if you calculate 3.5 billion shares, and you do this times the 12.56, we come out on a 44 million. That's just cash in the bank for Tesla. So that's quite nice. The return on invested capital is good, but we also want to see the profitability ratios. So where can we find them? That's here above. And then I want to go with you to the return on invested capital. That's here.
that was €4.27, but it was $18.65 in the third quarter of 2024. And do you see how it's steep in the downtrend? So that's also an important notice after all these hallelujah ratios. So the reason that this is happening is because Tesla's operating profit, it shrank due to price cuts, while the invested capital was still growing, and also the stock price was still in a good number. So the analysts expect that this number, it will increase in 2026 to estimate 8 to 9%. So it's an interesting number to see if it's really growing or not. Then I want to go, we are almost finished, but the last one I like to share, that's the price to earning ratios. And that's, we have it here. This one I want to look at your price to earning ratios. We see it here on a very high amount. It's 387.61. And probably the first investor I was talking about, he was looking to this number also. Now, why is that? What do we see here actually? We see that the profit dropped significantly. So while the stock price stayed on a high or rebounded, but we need to look to the forecast for Tesla. So the professional analysts estimate that the Tesla will earn about $2.06 per share. So if you do the math, the stock price is now around 420 or 410. We divide it by those expected future earnings, and then you will get forward to a PE of $206. Now for companies at the S&P 500, it should not be acceptable, but I think for the market, in Tesla, they will pay a premium for a Nasdaq stock like this for 206 is really good. So let's check if this number will go down in 2026. So that were actually all the ratios I want to show you. You can control this the coming year if you are interested in the stock of Tesla.
Understanding the ratios in context, that is helping you to choose the right framework. So the key is matching the valuation method to a business model. And what will be helpful to understand is that Tesla sits in the intersection of technology, the energy, and also the artificial intelligence. So whether it becomes one of the most important companies of the next decade, that depends not just on innovation, but on execution. So for investors, the real question isn't simply whether Tesla will grow, but whether it will grow fast enough to justify the expectations, which is already built into the price at this moment. And that is what it makes one of the most interesting and fascinating companies to analyze today. So we have the market expectations versus the reality and versus investing. So first the reality. Tesla is a 1.57 trillion company with a volatile auto business, a growing energy business, and an ambitious capital and intensive plan for the future. Then we have the speculation, the hope that the FSD, that is the full self-driving, the Optimus and the Cybercab will create a 10 trillion USD empire. And that is a kind of lottery ticket, but also partly embedded in the stock price. And then we have the investing framework. Don't ask what is the price target, but ask yourself, what do I believe that needs to be happen for the stock price go to this level or another level. So the goal isn't to predict the future, but to understand what the market already expects. Because once you see the difference between, in one side, the reality, in the other side, the speculation, and of course, investing, you will stop guessing and you just start making decisions with context. Now, I hope you enjoyed the whole story behind the stock, but also the ratios and not only the hype. So if you learned something today, please hit that like button to help others also to find the video. And here is the thing. I want to hear from you. Is there a company you like me to analyze? Maybe a new high-tech growth company, or maybe a traditional Dow Jones company stock. So drop it in the comments below, and please don't forget to subscribe. Thanks for watching this video, and see you in the next one.